Navitas Semiconductor is a leader in integrated circuits, which are designed for fast charging, renewable energy, and industrial applications. The company is winning major design wins in the data center space, which is the fastest growing segment for semiconductors worldwide. This video, I'm going to review the company's biggest risks and then share with you my proprietary discounted cash flow valuation for the business and let you know if I think the stock is a buy, hold, or a sell at current prices. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, let's start with the risks in its design business, right? It's a semiconductor design company and it needs to win business. And these are extended sales cycles. So the process of winning a company contract is lengthy and resource intensive. And there's no guarantee that you win that contract and you're meeting with your clients, and you're working with them, demonstrating, showing them using company resources. And those sales cycles are likely to get prolonged now given the macroeconomic uncertainty. So even after they win a contract, it can take time in order for that contract to turn into revenue. And then a substantial portion of revenue may depend on a single product design with a large customer, which increases vulnerability. There's also some market penetration challenges. If they fail to secure wins, it can hinder market expansion and revenue growth. So they're constantly having to renegotiate, win contracts. And this is a difficult process because it's highly competitive in nature. So supply chains, this is a risk that's hitting companies worldwide, and component shortages and higher cost of goods is likely to be more common in the coming quarters after President Donald Trump initiated increasing tariffs on several of the United States trading partners. And so there's already cost fluctuations in this industry, and given the increase of tariffs, these cost fluctuations are likely to be more extreme. And then the logistical challenges. These geopolitical tensions will likely disrupt the supply chains. And can Navitas navigate these changes, given that it's one of the smaller semiconductor companies? It's not going to get priority treatment. And so will it be facing significant challenges? Likely so. And it remains to be seen if they can handle these properly. All right, so as a semiconductor design company, they are highly exposed to intellectual property risks. So ensuring their IP protection is critical to maintaining competitive advantage. There's a risk of inadvertently infringing on existing patents, leading to legal disputes. The established competitors with more resources may challenge Navitas's market position, and they constantly need to invest in research and development because they need to continue to innovate to stay ahead. Otherwise, their competitors will invest in research and development and leapfrog ahead of its technology. All right, so now that we looked at the company's risks, let's look at valuation. And this discounted cash flow model is a proprietary model I created. It values a business based on the present value of all of the free cash flow I expect the business will generate between today and the very, very long run. And for Navitas Corporation, the present value and the value of the business today, I've calculated at $1.85. The current market price is $2.02. So because I like to have a margin of safety for my calculations, I would say Navitas Semiconductor, I would say this business is fairly valued at $2.01. Because of that margin of safety, I like to apply. Now, the discount rate I applied for the company is 17.41%. That's a relatively high discount rate because the company has a higher beta, 2.2. Remember, beta is a measurement of risk, and a beta of 2.2 signals that this is an above average risk. And it is above average because they are expected to generate negative free cash flow in 2025 and in 2026, breaking even in 2027 before turning positive in 2028, according to the analysts that are following the company. Still, the stock is trading near its 52-week low, which was $1.52. The 52-week high was as high as $5.14. Today's price is down 2.43%. Company still negative on the bottom line. Its earnings per share over the trailing 12 months were negative 46 cents. So it's still in early stages of growth. It does have technology that's highly in demand right now, which is improving the efficiency in semiconductor, and power efficiency is something critically important right now because artificial intelligence, the rising effectiveness of AI, is creating a surge in power consumption, both in terms of developing the artificial intelligence takes a lot of power to train these models, and then inferencing, which is when you're asking AI the questions and you're looking for answers from the large language models, you're using up a lot of power. It takes up a lot more power than a regular Google search query. And so these increases in power are straining the system, and some data centers are not even getting built because they don't have sufficient power to supply these data centers. So power efficiency is something that's very highly in demand, and I would suspect that this is going to continue for the next 5, 10, 20 years. And so Navitas Semiconductor is in a good position in that regard. However, I think the current valuation is fairly valued. And so I don't think it's an excellent business just yet. And when I look at a fairly valued business, I usually rate them a buy when it's an excellent business. But when it's not an excellent business, I need other factors to be working well in its favor. And I don't see that right now for Navitas Semiconductor. So for those reasons, I have the stock rated as a hold, and I updated this recommendation on May 5th, 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.